Okay, peeps, welcome back. So today we're going to be talking about the Jackson Hole Symposium and what that means for risk on assets and the markets in general. So with that being said, let's get it. Okay, let's first go over the Jackson Hole Symposium. Okay, I don't know what the heck that was. Sorry about that, y'all. So this is a blog that's pulled up from the Washington Times. So you guys can see on the header here, it says, Powell at Jackson Hole, the time has come for the Fed to soon begin reducing interest rates, is what it says. I'm not going to go too deep into this, but I will read a few things here. So we'll start at the top here. So it says, with inflation nearly defeated and the job market cooling, the Federal Reserve is prepared to start cutting its interest rate from its current 23-year high, said Jerome Powell, chair, on Friday. Which is today, of course. Powell did not say when rate cuts would begin or how large they might be, but the Fed is widely expected to announce a modest quarter point cut or quarter basis point cut in its benchmark when it meets in mid-September. The time has come for policy to adjust, Powell said in his keynote speech at the Fed's annual economic conference in Jackson Hole, Wyoming. Direction is clear, and the timing and pace of rate cuts will depend on incoming data and evolving outlook and the balance of risks. So there's a couple other things I want to point out here. So it says, according to the Fed's preferred measure, inflation fell to 2.5% last month. And I believe, if I'm not mistaken, that's based on core PCE. Don't quote me on that, but I'm pretty confident that is the Fed's go-to for inflation and how they measure it. So there's that. He said, my confidence has grown that inflation is on a sustainable path back to 2%. So it indicates here that Powell's assessment signaled that the Fed is making a shift from its 2.5-year fight against inflation towards a broader effort to keep the economy growing and employers hiring. So there's a couple things I want to point out here. Number one, look, we told you guys, I'm pretty confident. Maybe we didn't tell you this, but maybe we did. I can't remember. But I remember thinking to myself at one point that likely once headline inflation gets under 3%, that the Fed's going to begin cutting rates, or that they're going to signal that they cut rates, and that's exactly what happened. So I'm going to go over here to TradingView and show you guys this. So you'll just have to give it a minute to pop up. I don't know why it's being so slow right now. But as you guys can see right here, the headline inflation is at 2.9%. So basically that's under 3%, okay? So the bottom line here is that the Fed cannot just simply hold rates higher for longer forever. Eventually they're going to have to cut. And basically what that means for the economy and markets as a whole is that, because the Fed is turning dovish, that markets and the economy are expected to go into a boom cycle, which generally speaking means that there is an expansion of the economy. More employers are willing to take on more loans or business loans, or borrowing at cheaper rates in order to employ more people, which means that more jobs will be hiring. The stock market will go up. People will go out to spend more money, which means more profit for companies, which means that investors and traders have plenty of opportunity to make money. That's kind of how we're seeing all this, okay? So in terms of the expectation for the markets after Jackson Hole Symposium today, you guys can see that not much really changed. I mean, basically markets at this point are expecting a September quarter basis point cut. Now, as far as I can remember, and I did actually watch Jackson Hole while trading, I was watching this live, so I am pretty confident I did not hear Powell say anything about how much they were going to cut in September, or how many times they were going to cut before the end of the year. They just simply said that basically it's time. But I'm pretty confident that they're going to cut 3 times before the end of the year, and the markets are also very confident about this. So let's go ahead and go over the details right now. So quarter basis point cut in September, and there is even a small chance for a 50 basis point cut, although I would probably, I'm personally leaning more towards the 25 basis point cut. There's a couple of reasons for that. Number one, the situation doesn't really look too dire with where the economy is concerned. And number two, uh, you know, um, the Fed indicated that they wanted to see how they choose to cut and adjust their policy in cutting over time based on their confidence that they can retain basically, their dual mandate, that they can achieve maximum employment and keep inflation under control so that it grows only at 2% per year. So I think that first quarter basis point cut is essentially going to be kind of their testing period where they're saying, okay, let's just cut by a quarter basis point, and then we'll just kind of see what's going to happen after that, right? And then they'll decide how they're going to cut afterwards. But I am pretty confident the Fed will be able to pull off the Goldilocks zone soft landing narrative, so to speak. So in November, you guys can see that it goes from a quarter basis points to up to the highest probability at this point, a 50 basis point cut in November, which again, it's right around the time of the elections. Bitcoin should be moonshining by that time, and crypto and all that stuff. So it kind of lines up pretty much with the theory that we've had all along. And then in December, last meeting before the end of the year, they are expected to cut again. It looks like another quarter basis point cut. So we're looking at potentially a quarter, half, and then another quarter. I would say that's pretty on point. It wouldn't really shock me if that's what actually happened. Do I think that the markets are going to sell off when the Fed starts cutting? No, I do not. No, I do not. And the reason being is because the Fed has essentially shifted from, well, we're going to be data dependent to, well, we want to make sure that we can protect the economy, right? Essentially is what they're saying. So that tells investors that they understand the implications of their actions, and basically they know that if significant weakening in the labor market takes place, which again, I don't think that's going to happen, okay, that could lead to affecting the profitability of companies. Unemployment could spike, which means less people have a job, and the Fed doesn't want that. That doesn't look good for the Fed. That doesn't look good for politics. It doesn't look good for investors. It doesn't look good for anybody. Okay, so it's in everybody's best interest that the Fed make sure that they do this cutting cycle perfectly. Okay, perfectly for investors, perfectly for the people's confidence in the monetary system of the Federal Reserve, perfectly for the politics, for the politicians, because we don't just have a presidential election this year, we also have midterms as well. So it's, everybody's on the hot seat this year in Congress, because all of their seats are at risk, because if things don't line up perfectly for either Republicans or Democrats exactly perfectly in the Goldilocks zone, exactly as everybody would like, it's going to look really bad for them, and they don't want that. So this is how we're seeing all this stuff, just so you guys know what's kind of going on in the mind. So now let's go ahead and get into, let's see here. So the first thing I want to pull up actually is the SPX. I'm probably going to talk a little bit more about crypto and the Fed funds rate in this video, but we'll kind of just see how it goes here. So the Jackson Hole Symposium usually happens roughly around the same time every year, so roughly around August. The thing I want to point out to you guys is, so we were supposed to have bearish seasonality this year, roughly around August, September, October. We talked about it. It did kind of, well, not exactly it sort of played out a little bit at the start of August, but usually September is the worst month, and we haven't seen that. Okay, so the thing I want to point out here is we had a crazy sell-off, huge aggressive sell-off, much faster than the last two times that we had one. And in my mind, I think that pretty much just sets us up for rallying throughout the rest of the year. Okay, so you can see back here we had 42 days. This one, basically pretty much from the top here all the way down to the bottom, is roughly about 98 days. And then this one from the top here down to, okay, I don't know what the heck happened there. So try this one more time. So from the top down to the bottom here, it was only 28 days. Okay. So the drops seem to be getting faster and more aggressive. So once again, you have, well, not 49, but basically 42 days. And this one was basically a month. But the thing I want to point out here is usually every single year or almost every year in a QE bull market, we usually get at least one, maybe two small corrections throughout the year. Okay. That's normal. That usually happens in bull market years. So this year we actually got one early. It happened in a very, very short amount of time, and the NASDAQ went down nearly 17%. So that's a huge correction. That's almost bear market territory, but we made that V-shaped recovery. Now we're back within this rising, broadening channel. So that's extremely bullish, in my opinion. But I think because we already had this dump, it pretty much just played out the bearish seasonality like Godspeed. And then for the rest of the year, we're either going to go up and or side. Well, I mean, there will be some up with some sideways, but I think it will be mostly up, in my opinion. Plus, we have that end of year rally, October, November, December. That's usually the most bullish time of year. So that's what I'm expecting, irrespective of the Fed rate cuts. Okay. But the thing I want to point out here about the Jackson Hole Symposium is usually they have one around that August timeframe. What did we see last year? A dump. Okay. And what did we see in 2022? We saw a really big dump, which was almost the bottom of the bear market there. But this time, we're actually rallying into the symposium. And the thing I want to point out here is it wasn't really a huge green day per se, but the fact that the day was green at all, in my mind, tells me that the Jackson Hole Symposium this year is actually a bullish event. Okay. And they did signal that they're going to cut rates. As you guys can see, a lot of positions have gone up today, so that's huge. So the other thing that I wanted to talk to you guys about in this video is the fact that crypto is going up. Okay, we usually talk about this in a separate video, but you guys can see on the daily time frame, Bitcoin has had a massive move up on this daily. Just to show you guys how substantial this is, and this is not altcoins, this is just Bitcoin by itself. Crypto really liked what Powell had to say at the Jackson Hole Symposium. So up 7.7% here. And a lot of these other positions are also up massively. As a matter of fact, all of them are up. Even you guys can even see some of the grayscale trusts here are up. So breathing some life back into the crypto space. But the thing I wanted to point out to you guys once again is the inverse correlation between the dollar and Bitcoin. Whoops, actually, I did not mean to do that. Let me go back here to Bitcoin, all the way down here. Okay, so I'm actually going to move over to the weekly time frame to show you all this. So I'm going to show you guys the price of Bitcoin stacked against the dollar, and then I'm going to show you guys the dollar stacked against the federal funds rate, so you guys can kind of gain a bigger level picture understanding of exactly what we're seeing here and why we think likely when the Fed cuts rates that crypto is going to start moonshotting to the beginning of the actual true bull run for crypto this year and next year. And it should be pretty obvious what's going to happen at this point. Now, is it going to happen exactly like we're telling you? Well, we don't know. We'll just have to wait and see. But generally speaking, these things have usually played out more or less very similarly every time they've happened. So, all right. So we'll start here. Let's actually start from going a little bit back here. So we'll go all the way back to 2000, maybe 2017 right here. So the thing you guys can see is Bitcoin. It's very hard to see because the price action is so small back here, but Bitcoin was kind of just sitting back here right before it took off for the 2017 bull run. You guys can see, actually, if I zoom in here, it'll be probably a little bit easier to see. You guys can see right here, this vertical white line was the halving. Okay. So shortly after the halving happened, what happened? Bitcoin started to go up as the dollar was going down. Okay. As the dollar plummeted, that's when Bitcoin had its massive bull market. So, what has to happen in order for the dollar to plummet? Well, basically, what has to happen is the Fed has to cut rates. That's what has to happen. When they raise rates, the dollar goes up. When they cut it, the dollar goes down. The reason for that is because when the Fed cuts rates, or I'm sorry, when the Fed hikes rates, basically it's safer to be in cash and cash equivalents, so high yield savings accounts, bonds, CDs, things like that. But when they cut rates, usually inflation is at a low point at that point, so they cut rates, they go back to monetary easing, and then the bond yields and savings interest rates and stuff like that is no longer attractive because they drop with the Fed funds rates. Okay, that's how it works. So then money will flow out of cash and cash equivalents back into risk on assets. So, okay, so Bitcoin goes down here into its big bear market as the dollar goes up. Okay. And then we see that Bitcoin is kind of, just chopping around here, goes up, then goes down. But if I move over here a little bit, and again, this is going to be really difficult to time. Okay, I cannot time this for you guys perfectly, but what I can say is generally speaking, when the dollar goes down, Bitcoin goes up, and the inverse is also true. So you can see that the peak of the dollar hit right here, right around this pandemic low for Bitcoin. And then what happened? The dollar started going down as the money printer was turned on, and then the price of Bitcoin went up. And as the Fed had basically signaled back here, or basically as the Fed started raising rates, which was, well, I take that back. Actually, the Fed didn't start raising rates until March of 2022, but you guys can basically see that as the dollar was bottoming out, okay, we had this little double bottom here. Once that happened and the dollar started going up, Bitcoin went down. It did have a second peak, but generally speaking, the price of Bitcoin went down as the dollar went up. So when the Fed cuts rates, we're expecting the dollar to go down because, again, it's more attractive to be in stocks and crypto versus risk-off assets because, again, the 5.5% savings interest rates and 5% bond yields, those are going to come down with the Fed rate as the Fed cuts, okay? Those people that want to make money on their money, they're going to move their money into stocks and crypto, and that's when stocks and crypto are going to have their boom cycle. Okay, so this is the reason, and this is one of the reasons why I say that I think likely the actual bull run for crypto and Bitcoin has not actually happened yet. It has not been priced into the crypto markets. And the massive moonshot that we saw on Bitcoin to 75,000 was the market pricing in the spot ETFs, but not pricing in the actual bull run. Okay. So in my opinion, the bull run actually has yet to still happen starting roughly around October, November, December of this year. Again, the reason why I say this is because Bitcoin went up as the dollar is still kind of sitting relatively high on the chart. Okay. There hasn't been a massive fall off of the dollar. It's mainly just really gone sideways while the price of Bitcoin went up. Okay, that usually doesn't happen. So again, this leads me to believe that likely Bitcoin rocketed to all-time highs because of the spot ETFs, not because of the actual monetary easing, which still has yet to happen. So in my opinion, I think Bitcoin does have still a large upside potential here. And I do think the Bitcoin and crypto bull run has not yet been priced in. Okay, so with that being said, I'm now actually going to pull up the Fed funds rate on the left, and I'm going to pull up the dollar on the right, so we can take a look at this before I close this video out. So Fed funds rate on the left, dollar on the right. All right, so this is, let's see if I can find it here. So got to kind of zoom out to see this. But the thing I want to point out here is you guys can see that. Actually, you know what? Let me actually zoom out a little bit more. So we have more data to work with here because again, the Fed funds rate is, I should say, has been something that's been in existence for quite some time, as long as the Fed's been in existence. So you guys can literally see, all right, look, you see this triple top here on the dollar? What happened right after that top on the dollar took place? Or I should say, well, I suppose the Fed funds rate in this case would be a leading indicator because the dollar kind of followed the price of the Fed funds rate. But you guys can see that the Fed started cutting rates back here in 2000. Dollar kind of did this triple top, and then eventually the dollar started coming down with the Fed funds rate. Okay. What's interesting about this is it's not perfectly synonymous. So Fed funds rate went back up and the dollar still more or less went down. But you guys can see that mostly the dollar was kind of sitting at lows. And the vast majority of this time over here, the Fed had rates at lows. It was at highs for very little of that time. So the dollar was pretty much sitting at lows while the Fed funds rate was mostly sitting at lows. And it seems like the dollar pretty much went up as the Fed was beginning to cut rates, or not cut rates, as they were beginning to hike rates, the dollar went up. And then, of course, the dollar went down with the Fed cutting rates, and then the dollar went back up with the Fed hiking rates again. So you can kind of see the similarities here with what happens, okay? Fed funds rate goes up, dollar goes up, Fed funds rate goes down, dollar goes down, dollar goes up, Bitcoin goes down, dollar goes down, Bitcoin goes up. In this case, we're looking at the dollar going down and Bitcoin going up because the Fed funds rate and the dollar will both plummet as the Fed cuts rates at whatever pace they choose to cut it at. But the idea here is that with the Fed funds rate and the dollar going down, Bitcoin and stocks ideally should go up, okay? Because again, it doesn't make sense to put your money into a 2% or a 0.5% bond yield to get 0.5% on your money when you could just go put it into, a relatively safe 8% yielding dividend paying stock that's going up in value because of Fed's printing money. And usually stocks go up when they go up more when the Fed prints money. So, basically by the end of the year, I'm expecting that the price of Bitcoin is going to go into its big bull run. We're going to see a big Bitcoin bull run. Exactly what the peak is for that, I have no idea. It could be anywhere from 125,000 to 220,000 is kind of my estimate. Eventually, that money will roll off into altcoins. Altcoins will moonshot, and then altcoin bags will pop off. I can't guarantee this, okay, but I give this a very, very high probability. And as you guys can see, the crypto space, just on Powell's words alone, we're already starting to get some love. Honestly, I remember back in November of 2021, and I can actually show you guys this right here. I remember back in November of 2021 when Powell came out and said, "Oh yeah, we're going to raise rates in March." I remember what that was like. The based on what Powell said alone, the market started chopping around here, and it wasn't long after he said that they were going to raise rates that the market started selling off, and then it just kept going down and down, and it felt like it was never going to end. So the point I want to make here is on Powell's word alone, on the Fed's word alone, saying that they were going to raise rates, the markets went into a bear market. And on Powell's words alone, saying that they're going to cut rates and that they're going to try to achieve the Goldilocks zone, as it were, which I think they will. Honestly, I think this time they're going to do it. Then the markets will go into a bull run. Okay, we saw the immediate reaction today. I mean, you guys can see all of crypto is up massively because of the message from the Jackson Hole Symposium. You guys can see here that pretty much everything risk on was up. The S&P was up 1%, NASDAQ up 1%, Russell's was up a massive 3%, gold and silver up 2.6%, even palladium and platinum up 2 to 3.5%. So pretty much everything that you could think of that's long risk on in the markets went up in value, just based on Powell's words alone that he's going to cut rates. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.